Shifting focus to the infrastructure space, according to Asanda Tsotsi, head of project and export finance at Standard Bank CIB, the positive effects of infrastructure development on economic growth and poverty alleviation is well documented. But simply investing in infrastructure projects won't necessarily unlock Africa's growth potential unless it's strategic. Asanda joins us with a greater perspective on this. So thank you so much for your time, Asanda. Now, how behind are we in Africa in critical infrastructure investment that's enough to drive meaningful economic growth?
Yeah, thank you very much for that question, Zinati. So the FDB estimates that Africa should be spending around $170 billion in infrastructure annually, up until 2030 at least, in order for us to address the infrastructure backlog. Currently, we are spending around $70 billion annually. So that leaves about $100 billion gap in infrastructure that is not enacted each year. And so from a deficit perspective, that deficit's about $100 billion annually.
Well, I mean, you say in your notes that, capital isn't actually the problem here. Does that apply to both the private and the public sector? Because I do note that African governments are actually spending less than, in Africa than, some of their peers in the developing market space.
Yeah, that's correct. I mean, if you consider that we spend, let's say, $70 billion annually in infrastructure. That's about 3.5% of Africa's GDP. And actually, in order to be competitive, we need to be spending around 7.7% of GDP. Countries like China spend about 7.1%. India spends about 5.2%. So if you compare the African continent to China, to India, we are behind in terms of our infrastructure spend.
So, of course, the private sector can come in to plug that gap. There is no lack of capital. But really, you say that the issue here is a lack of bankable projects. Talk to me about this gap and the restrictions that we have here, where the capital isn't really finding fertile ground in infrastructure investment.
Yeah, and I mean, there's about $100 trillion of assets under investment sitting with pension funds as well as sovereign wealth funds. I mean, in South Africa alone, the pension industry sits on around 4.1 trillion rand of assets under management. And so the issue is not the availability of capital. The main issue that we've seen, which affects infrastructure development, is actually the bankability of projects. So we see a lot of projects that come through that are not bankable.
For us to actually, to get these projects, where actually do they need to be? Where does the laser focus need to be in terms of the targeted sectors that could actually drive significant economic growth?
So, I mean, it's many sectors, rail, roads, ports. This is all critical infrastructure that is required to move goods from one country to another. And if we are not able to efficiently move goods between the African countries, that has a knock-on effect on economic growth. That has a knock-on impact on the cost of goods that we trade amongst ourselves. So due to our challenges with infrastructure, that adds about 30 to 40% of costs, for the items that we sell to each other. And so these items are then not competitive when sold to markets outside of the African continent. So I would say, we need to be investing in that type of infrastructure that will support economic growth.
Asanda, going back to the supply of capital, I mean, just from, institutional investors, but also development finance agencies, do we have appropriately packaged financial solutions for Africa in this regard?
So in some cases we do. So in some cases, what typically happens is that investors have a homogeneous, I guess, analysis of what Africa is. And so, you know, a good example of this is the just transition, where, you know, South Africa has really great solar and wind resource, but Kenya does not have the same solar and wind resource. Nigeria does not have the same wind and solar resource. And so what you find is investors want to invest in, let's say, renewable energy or in solar and wind, but actually Kenya has a lot of geothermal resource, and Nigeria obviously is gas. And so I would say that in some instances, you know, that's one of the reasons why we don't have a lot of investment in infrastructure. I think the other issue is really just around the bankability of projects. And I mentioned this earlier, and maybe just to explain what we are talking about when we mention bankability. And really, it's looking at a project and assessing its viability on a number of fronts. So the first is economic viability. Can this project repay the debt you know, that it is taking on is kind of the first question. The second one is that, is this project socially viable? So will it benefit the community? Will it increase taxes that flow to the fiscus, et cetera, et cetera? And then the last bit, well, not the last bit, but on viability, it's then around the environment. So, you know, does this project meet the World Bank's Equator Principles, as well as the IFC performance standards? Also, you need to look at the relative experience of people, you know, who are running these projects. It is absolutely critical, you know, for these major projects that you have the relevant skill set and capability to execute them. And then the last piece is really around the regulatory and legal framework. And that is really important to make sure that when capital invests in your country, you know, it is able to generate returns and get back, you know, the capital after the period of investment.
All right. Well, we do have to wrap up the conversation there, but thank you so much for enlightening us on what is needed for critical infrastructure investment in Africa. Thank you so much for your time, Asanda. That was Asanda Tsotsi, Head of Project and Export Finance at Standard Bank CIB. And that's all from The Close. We're heading into a short break now, but do stay tuned for lots more coming up right here on Business Day TV.